Hello and welcome to The Trade. Let's get a quick look at what traders are watching. A ceasefire between Israel and Iran-backed group Hezbollah expected to take effect later today after both sides accepted an agreement brokered by the US and France. This according to US President Biden. Oil prices settling lower on Tuesday, extending Monday's losses in choppy trade after Israel agreed to a ceasefire deal with Lebanon, reducing oil's risk premium. We are hearing from officials from Mexico, Canada and China, as well as major industry groups warning that President-elect Trump's threat of hefty tariffs on goods would harm the economies of all involved and cause inflation to spike, as well as damage job markets. And gold prices caught in a tug of war, dipping to a week's low as safe haven demand softened, with Israel agreeing to this ceasefire with Lebanon, while concern over Ukraine and US President-elect Donald Trump's tariff plans limited declines. And the global platinum market to be in a structural deficit for a third consecutive year in 2025, with mine supply remains constrained despite rising recycling and a 1% decline in demand. This according to the World Platinum Investment Council. Let's get into the charts now. Tony Sycamore from IG joining us. Let's get into the Nasdaq, which rose by a hefty 0.6%. So tech shares very much rebounding. This sort of thought that they'll have lower susceptibility potentially to tariffs, Tony.
Yeah, 100%, Jules. We did see, obviously, the Dow Jones do very well at the start of this week, but with Trump's tariff threats re-emerging yesterday, it really was a situation where traders were more inclined to shoot first and ask questions later. And in that respect, the Nasdaq, as you mentioned, and tech stocks probably a little bit more immune from the threat of tariffs. So in terms of where we see that Nasdaq chart, well, it's been fairly slow going, but it is continuing to make progress towards its record highs there. So all things being equal, given the fact that we've been reminded of this threat of tariffs, I do think the Nasdaq can probably take out that high into year end, which isn't a big call because we know we are in a seasonally strong period for markets. So that's kind of the way I'm seeing the Nasdaq at the moment. A little bit boring compared to some of the other indices at the moment, but slowly but surely it is making progress, which is great.
Yeah, indeed. All right, well, let's get into our market because we are having a good day, but it's really interesting, and you and I have talked about this a lot, that every time the ASX 200 seems to get to these high levels, it pulls back again. And we saw a record intraday reached a couple of days ago, then a sell-off yesterday on the Trump worries. Today we're higher, but not above 8,400.
It's as regular as clockwork, isn't it? We get that fresh record high, and then the next day and into the close of that fresh record high, we see selling. And yesterday, the follow-through came to the downside. And again, it came through the Trump tariff threats there. And what I found interesting, and I posted this in a note yesterday, was that Trump's talking about a 10% increase in tariffs on China, which would increase the average tariff rate on Chinese goods to around 27%, because it sits at around 17% at this point of time. Now, at 27%, we're talking about significantly lower than the 60% which he spoke about in the lead up to the election. And currently, the consensus expectation is tariffs are around 40%. So it was something else that I think drove the ASX 200 lower yesterday. It was the falls in the big banks, obviously after that APRA announcement that they would keep that 3% service buffer on new loans. So that was, I think, more the driver rather than the Trump's tariff threats. But in terms of where we see the ASX 200, the rejection which we've seen over the past 48 hours isn't fatal to me until we break through support at 8,300. It just has been this slow progress where we get 2 steps forward, 1 step back. This week's been no different, and providing that trend continues, I mean, there's no reason why we can't continue to push higher into year end.
All right, let's have a look at the big one. Bitcoin didn't quite get to 100,000. Is this a time then, or a sense that maybe this is where the top is for now?
It had such a wonderful run, Jules. It really did. And the fact that we are seeing a pullback probably shouldn't be a surprise. I mean, markets don't move in straight lines, and even crypto isn't exempt from that rule. So the way I see things is, yeah, look, it failed to get through 100,000, but that's not the end of the story for me for Bitcoin. I think during this pullback, we may just see a little bit of a retracement down into the high 80s, maybe mid 80s. But for me, the story remains, and you want to be buying dips in Bitcoin because, as I said, I do expect to see retested that 100,000 level. Now, I'm talking about weeks, not days, so please keep that in mind. It is something which it's had a huge move. A little bit of consolidation over a period of 3 or 4 weeks would not surprise now. So please keep that in mind. But look, I think the trend is strong, and the fact that we have this pro-crypto president now in the White House the next 4 years, it looks pretty good for me.
Okay, what about oil? We were just talking about hopes that there will be finally a ceasefire reached more than a year before the conflict started between Israel and Hamas. A little bit of a dip lower in the crude price on this news, but what are the technicals showing us?
Well, it's been really struggling to get above 72.50-ish. It's had a couple of tests of that level and just hasn't been able to get above there. Last week when we were chatting, we said, look, fairly bullish for a push up towards that 71.50 to 72.50 area. It got there. And of course, as you mentioned, you've got reports that Israel and Hezbollah are talking about or have agreed to a ceasefire. You also had reports earlier in the week that the Trump transition team is going to prioritise increasing oil and gas supply. So things there certainly have presented a headwind for crude oil. And for me, we're in a bit of a range now. It has found that going up towards 72.50 just too tough to tackle. But by the same token, it's been well supported down towards that 66 to 65 area. And I think that probably continues for the next few weeks. We're just really looking for a catalyst to see crude oil get out of that range right now.
All right, let's go to our dollar as well, because we've got inflation data coming through in about 13 minutes time, Tony. But certainly the Aussie got punished yesterday on the trepidation over Trump's tariffs.
Yeah, again, shoot first, ask questions later. I think it was probably the wrong reaction. As I said, the actual absolute level where he's talking about tariffs going to is less than expected. So needless to say, you also had the fact that you had the FOMC minutes overnight talking about or sounding more cautious about the prospect of Fed rate cuts, and that's supported yields and supported the US dollar. So where it's left the Aussie dollar, well, we did see a flush out below 64.40 yesterday. It's rebounded. To me, it's probably still got a little bit further to go to the downside. We've spoken about this weekly, multi-week trend line support at 63.60 to 63.50. I think until it gets down to that area, you've got to treat bounces with suspicion. So if we were to see a stronger inflation report today, I think that probably is going to be faded. I do think we've got lower to go, and that really needs to be seen. We really need to delve below 64 cents before we can feel that this really sharp sell-off we've seen since the end of September is complete.
All right, I treat a lot of things with suspicion, Tony, but we'll take that on board. Thank you so much. Have a good trading day.
A wise move, Jules.
Tony Sycamore there from IG. Let's take a short break. That does it for this edition of The Trade. Be sure to join us again next time.